Now, with the understanding of the financial statements in mind, what comprise of financial statements, who are its users, in that in mind, we're going to see what are the objectives of creating a financial statement. Okay, why is it so important for entities to create financial statements project wise from the entity's perspective, as well as what are the benefits a project manager can derive by understanding the financial statements, how they work, how are they evaluated, and so on. So first, look at it from the entity's perspective, for the company's perspective. What are the objectives of creating the financial statements for individual projects, for the organization as a whole, for the company as a whole? First is they are able to track the ongoing projects on a real-time basis. So if the financial statements are being prepared on a regular basis, say every weekly, every 15 days, every month at least, so the company gets an insight into the individual projects going on a real-time basis. Any organization will not have just one project to be carried out at one point of time. They will be having a multiple project sequence going on simultaneously. Hence, it is important for the company to know, at least get a key insights into how each project is performing, and then take the future decisions with that regard. Next is determining if the project is meeting the standard returns. Okay, by standard returns, we don't mean the market standard returns, we mean the standard set by the company. So what is basically standard returns? Let's say government tax risk-free bonds gives a standard return of 6%. Okay, that is, you invest in your fixed deposit, your government bonds, and you're able to get a 6% return on that investment without any risk. You have a portfolio where your portfolio manager is able to derive a return of 15%. That is, by investing the various surplus cash in stocks and shares of other companies, by doing the bond tradings and all, he's able to give the company a rate of 15% annually. Now, if the project on hand is generating just a return of 12%, higher than the risk-free return, but lesser than the portfolio manager's optimum return, do you think, does it make sense for the organization as a whole, as from the point of the organization, to invest in the project which is giving just 12% returns? No, right? Because they will say, when the funds can generate a return of 15%, why should we invest in 12%? Unless there's some intangible benefit which is being proved, it's mostly rarely going to be happening, right? So you get the point. I hope you get the point that the company needs to determine whether the project are meeting their individual standard returns, their standard returns. If no, they need to divert their resources for a better utilization, for a better opportunities. Forecasting the outcome of the project. Okay, by forecasting the outcome of the project, we mean that if we have a continuous real-time data, and if suddenly the environment in which the project is operating changes, like some new regulation comes into picture, suddenly a new competitor comes and launches a similar product on which the company is already working. Here, the company can quickly take a decision whether to divert the resources from the existing project, whether to deploy more resource on the existing project, and such actions which will not only help the project manager but the entity as a whole to make sure the project is going to give the maximum return it can in the future when the project is completed. Divert resource from existing low return to high return projects. Let's say a company is having an ongoing project which is still going to take a sufficient amount of resources to be deployed to generate a return of 18%, and the company founds a new project, a new venture in which it needs to just invest half the amount of the project and generate a return of 25%. So here the company needs to think about whether to go ahead with the existing project or to divert the resources in the new project. If the existing project does not have a great bright future, promising future, the company will definitely put it in the new project, because the higher return, because of the higher utilization of the resources, better utilization of the resources, the higher return, and so on. So shutting down the existing low return project does make sense for the company. Let us say, we'll continue the previous example of the forecast one. A company is already developing its unique prototype product in which it has invested $1 million till now. It's expecting to realize a revenue, or you can say a return of 17% on the entire $1 million, but with the condition that it needs to invest additional $500,000. And here the company finds another opportunity where they can just invest $500,000 and generate a return of at least 25%. What do you think the company is going to invest in? It does make sense from the financial perspective to invest, from the organization as a whole to invest in the new project, because that's more promising, has literally 1/3 of the investment cost, and gives much more higher return. So those are the decisions which the company can quickly take if it has a real-time financial statement prepared, or you can say these are the objectives for preparing a financial statement for individual project-wise for the organization. And lastly, identify the key performance across various projects. So over here, the intention is not to eliminate the low performers, but to identify the key performers who are performing at their peak capacity in any projects and adopt their best practices, adopt their strategies and apply it to the other projects being taken on within the organization so that every project can perform to its peak capacity, to its highest capacity. Obviously, sometimes the intention of the management goes in a negative direction, but if you are a project manager and not able to give the optimum return, the best performance, and you can see that some other guy in the company is performing to his, it's generating much more higher value for the company when the same project or different projects. It does make sense to know his strategy, his understanding of the project, adopt those practices for yourself, for your betterment at least. If your project catches up with the other projects, it's great. Even if it does not, you'll at least learn the best strategies for project management, for a real how to, analyze the financial statements and prepare your financial statement for project as that in that line. So those are the benefits which the organization can implement from its own side. Now let's look at the benefits of, or you can say the objectives of preparing financial statement project wise for the individual project managers. Okay, why is it so beneficial for the project managers to prepare the financial statements for their projects? So before that, I hope you understand this one thing. All these objectives are being diverted towards one single objective, enhancing profitability of the organization. So that's why it's very important for the project managers to understand how the various methods of tracking the performance of his projects are working, are functioning, so that he can make himself aware of those methods and educate himself and make sure he presents the financial statement, he prepares the financial statements on his own end using those methods and derive the following benefits. Take corrective action. By taking corrective action, we mean that taking corrective action before it's too late. Like one day you realize your project is not performing, your financial statistic of your project is not in a company's acceptable parameters, and they decide to shut down the project. Now suddenly you caught off guard because you were not prepared for those kind of answers. Had the project manager had the basic awareness of the financial statements, had he prepared those financial statements in line with the company is going to evaluate, he could have taken proactive measures initial itself and modified his project according to the needs of the situation and made sure his project would have survived to the end with generating a great positive returns also. Explain the top management of the future course of action. Now, if the project manager is able to create his financial statements on a real-time basis, he has a much better insight into what's going on and what should the future course of action be so that his project will achieve the expected returns and the objectives with which it was started will be accomplished for sure. Develop better forecast and budgets. If the project manager has a good understanding of developing financial concepts, he can develop a better forecast, a better budgets for the projects and deploy his resources and time for achieving those budgets and give a good return to the company, thereby establishing his valuable credential as a project manager and setting an example for the whole company as setting an example for his other project managers. Like we just discussed a couple of minutes back, the companies do take the high performing project managers and set an example and try to publish their methods, strategies which they use to other project managers so they can also be brought up to the speed. Lastly, they are able to project the existing project profitability by analyzing the project's ROI, return on investment. And this is a favorite computation for any analyst, any investor analyst in the whole world. So by this, we mean that the project manager can himself evaluate how much amount has been invested so far in the project, how much cost has been invested, what is the expected return of the project, and are there any other opportunities which can generate the same ROI. So the project manager himself can go ahead and sell the company that, look, this is a new opportunity which I found. Compared to the existing projects, this project has a good amount of return on investment. If we divert our resources there, we have a beautiful, great outcome, and the management may appreciate that and take his decision. And thereby he sets himself a great credential that when time was right, he did not get too emotionally attached to his existing project. He was willing to drop it and take up the new opportunities which were benefiting the company as a whole, thereby not just satisfying your ego but thinking about the company as a whole. A project manager is able to establish his credibility, trustworthiness much more rather than sticking to the existing project which is not giving the optimum ROI, optimum return on investment as compared to the other projects in other opportunities available. So with this, I hope you have a clear understanding of what is the objective of preparing the financial statements for a project, individual projects. What are the benefits of a project managers to understand the financial statements, how he can take corrective course of actions, utilize better opportunities hunt for better opportunities, utilize a better forecasting, prepare better budgets, and achieve his targets within the set timeframes, and thereby develop a good reputation, a good credibility for himself across the organization.